Hello guys and welcome back to my channel. This is the Forex Blue Key official, guys. So this video is going to be talking about market structure, which is the first topic in the series that we're going to be taking so far, guys. So this series is just me teaching my step-by-step guide on how I trade Forex from market structure, basically smart money, but I'm going to be concentrating on market structure in this video. And most of us already understand market structure. If you are already a trader, definitely you understand the basis of market structure. But then I'm going to be showing us market structure in a little bit different light, where I'm going to be differentiating and highlighting some stuffs that I use particularly in regards to smart money, guys. So basically we're going to be talking about pullback and correction, impulsive, breaking structure, and change in character. And most importantly, I'm going to be differentiating this misconception that we usually have about pullbacks and correction, the difference, and also break in structure and change in character and how they affect the market, right? So guys, stay tuned to the end of this video. If you haven't already, make sure that you subscribe to this channel. If you want to be a part of this series, guys, it's going to be super interesting and impactful. There's always something to learn. So make sure you subscribe, keep it locked on this channel. Do like the video and also share your comments in the comment section as well. So that being said, let's get to the video now. All right, so now we're gonna start with pullback, right? I'm just gonna explain them one by one, then we'll put everything together so it makes sense at the end of the video, right? So let's start with pullbacks. All right, so let me give you this particular example. This is what we're gonna start with. This is going to be the explanation for pullback. So basically pullback is the candlestick based concept of a little bit of retracement in the market, right? So let's say we have the market giving us something like this, a candle. We have another candle like this. We have another candle just like this. Okay, all right, just here. Okay, so we have another candle like this. Excuse me. Then we have another candle going up like this again, and then we have something like this, guys. Something like this. All right, so this is assumed to be like a sell candle. The color doesn't really matter, but then again in this video, let's just assume that this is a sell candle, right? So now this is a movement in the market. This is one very impulsive move. We have a buy candle, a buy candle, a buy candle, and then we have the sell candle right here. Now in the market, we cannot consider this as a correction, but we see this as a pullback, right? So this is basically a pullback in the market. So when you see and the only way we can confirm a pullback or a proper pullback in the market is when this last candle right here was taken out by this very last candle here. This particular one was taken out by another candle, and it took out this liquidity right here. So let us assume that we have this right here, which is like a wick, just a small wick here. But the fact that this market has taken out this wick, even with a body or a wick that was created just around here, it is still considered a valid pullback in the market. But if we have a situation like this where the candle just, you know, closes right here, and then this one opens right here and then continues to move on. Now this cannot even be quantified or be verified as a pullback in the market, because pullbacks actually before we have a valid pullback, we need to have a liquidity takeout. That it needs to wipe out the liquidity of the previous candle before the little bit of the pullback that was created, right? So this is an invalid pullback. It's still considered just an impulsive move in the market. But then when we have this market or this particular candle, because that is why initially I said that this is a candle based system, right, for pullbacks. So we have this like this, we can consider it a valid pullback, right? So this is just an explanation of what pullback is, and then we're going to move to the next part, which is correction. Now the difference between a pullback and a correction is that a correction is actually meant to take out the liquidities created by these pullbacks, right? So we have price going up like this. Let me just take this out and then give you this. We have market going, creating higher highs and higher lows like this, higher highs and higher lows like this, right? So right now we see this market move it in this dimension, creating these highs and these lows. Now this right here is an impulsive move, right? An impulsive move can be considered as a strong bullish or bearish move with high momentum, right? So you see this high momentum right here. Now this on its own right here is considered an impulsive move, just as we have this right now. Within these impulsive moves, we have some pullbacks that usually occur. That is why when you're in a trade, sometimes you see the market, you're probably making profit and you're in the trend with the market, but then at some point the market just gives a little bit of pullback and you start feeling like, oh, there's a correction about to start happening, so let me just take out my profit and just leave the market. And then you leave earlier than you're supposed to because it was just a pullback and not a correction. Now so let's get back here. So you can see that this particular movement is all one impulsive move, and within this impulsive move we have several pullbacks, right? Now correction, on the other hand, this right here, which is this correction, is actually meant to be taking out those pullbacks, those liquidities that the pullback has created, because this market is obviously moved by liquidity, and the big guys who are the banks, the hedge funds and what have you not, those guys are always after liquidity in the market. Anywhere there's some form of liquidity, they're there to take it out because that is how they make their money, right? So this a particular correction can be considered a correction when it has taken out a few liquidity in the market before it starts moving to the other side. Okay, so that is the difference between a pullback and a correction, right? So because of time, I wouldn't want to make this video too long, so let's just proceed to the next one, which is let's see, we'll talk about pullback, correction, we talk about impulsive move. So the impulsive move basically is what we just talked about right here, where we have this move, strong bullish moves like this, because obviously this is an uptrend, so these moves are definitely impulsive to the upside. And then when we have something like this, we see the impulsive moves are a bearish impulsive move, right? We'll have market do this, go up, come down like this, right? This is an impulsive move. This is a correction, impulsive move, correction. So within this impulsive move, we have a lot of pullbacks that occurred in the market. So we already understand what pullbacks are. And then we have this correction, right? Excuse me. Then we have another impulsive and so on and so forth, right? So the next right here would be break in structure. Now I just want to rush all this through. You can always go back to this video to understand it even better. Then when we're done, we're going to see how all of this actually works together, right? So let's talk about break in structure and change in character, because these break in structures and change in characters are slightly different, and they look very much alike, but they're not actually the same. So we have break in structure happen just like this in the market. Let me take this out. Take this out. All right, so this is a movement, right? This is an impulsive move. We have a correction. Now we have another impulsive move just like this. We have another one like this, another one like this. Now let me stop here for a bit. This is an impulsive, this is a correction, right? Now in an uptrend, we're meant to understand that when we're talking about market structures, we have higher highs and higher lows, higher highs and higher lows in an uptrend, right? But then how do we consider when we have a new low, especially a new higher low? Because that is what we use to, be able to get into a trade, right? Because we're in an uptrend, so we want to buy at a low, a discounted price. So most times when we see a market create an impulsive move like this and it stops at the particular point and starts dropping just like this, we consider that what? A new high, right? Now, how do we now consider this to be our higher low? The confirmation that we need to see that this is a higher low is when we have a break in structure. That is to say that this particular high right here have been broken and the price closed just above it. Not a wick, not closing by a wick, but closing with a full body, right? Even if it's just a small body, but as far as it closes with a body, is considered a break in structure, right? So when this price breaks and closes just above this, then we can consider this guy right here to be our new higher low, right? Obviously, if this guy doesn't close right here, it comes right here, we cannot consider this as a higher low, right? Because if price should go back, right here, you know, obviously it cannot be a higher low. So for this to be a verified and verified higher low, the price has to go above this one, right? This is what we call a break in structure. This is an uptrend. Obviously it's the same thing on the flip side when we're in a downtrend. Excuse me. All right, so now this is a break in structure, right? Also, let us see how it looks like on a downtrend. We have market dropping like this, then it goes back. Okay, not this. Let me use this tool. We have market dropping down like this, impulsive move, and within this impulsive move we have a lot of pullbacks, and then we have correction taking place, either a deeper correction or a very shallow correction, and then price stops there, and then we have this like this. When we have stuff like this is obviously the lower low, then this is the lower high. This is going to be considered a lower high because the next high was created and it broke this last lower low, right? So this is the lows. Now, when you're in a downtrend, obviously, you're always going to be looking for sell positions. So if you want to look for sell positions or discounted sell positions, you're going to actually want to trade from the lower highs, not the lows, right? Because you want to buy at a discounted price. So you want to buy from somewhere around here so that you can ride it all the way down. So that is how it happens on the downtrend, right? So for us to consider this guy here as our new lower low, this right here as a new lower low, we have to see that price has broken this, as our new lower high. We have to see price break down, break over this lower low for us to have a new lower low right here, right? This is gonna get a little bit confusing, but I'm sure if you watch this over again, you would understand it much better, right? Okay, so that is a break in structure. So now if we're going to talk about a change in character, which is slightly different, but they're all breaks, right? But this is going to be a change in character. That means we're changing the whole character of the market. If the character of the market at that particular time was bullish, we want to see a change in character. That means we want to see the price changing from a trending market, from a bullish market to a bearish market, or an uptrend to a downtrend, basically. So this is how it happens, right? So we have the price moving like this, creating a high. Then we'll have this low right here, obviously. Then we have this higher high, because we're above this high, so this is going to be considered a higher high, and then this right here is going to be considered as our new low. But then when we have market pullback again into this correction like this, now we see this market right here, which some people might consider first of all as their lower higher low, but then when the market moves just below this particular high, this cannot still be considered as a higher low. Rather, we'll see this as just an internal structure, right, that has been created. So market gets to this point and stops because the momentum has been lost already. Probably the buyers don't have the equity or the liquidity to push the market to the upside. The market starts losing momentum and starts dropping. Now, the only way we can consider this a change in character is when we've been able to break these particular low. Because remember what I taught you guys. Now, this guy cannot be considered as the higher low, because we have not seen price go above this guy right here. Now this is going to be considered as our last higher low. So before we have a change in character, market must break this particular guy right here before we have a change in character. So sometimes, guys, we might be deceived in the market because we're seeing this already as a higher low, which is wrong. That is why remember I told you guys that liquidity is always the game here. They always want to take out liquidity and take out your stop losses, right? So sometimes they might create this one to deceive us, make you think that this is going to be this is actually the next higher low, but then this is just underneath it is all liquidity. Now you can see sometimes price can come down to this point after it has taken out all the stop losses that are here and then do this. Now when this happens, this is obviously our last higher low. Now you could see that price has not taken out this higher low, but then you were thinking that this particular guy right here is the no higher low, and then you start buying and put your stop loss just around here. But then you see that the market came down, took it out, and still went up and created a new high. So this high right here that has been created, because it has broken above this particular high, is going to be considered as our new higher high, and this guy right here is going to be considered as our new higher low. Right, this one right here, our new higher low. So the market can be really fractal and confusing, but if you understand this concept pretty well, you would understand that you could actually take advantage of really nice positions in the market. Now, talking about changing character, so we go back here and say this is our new higher high, and this is our new higher low, and then we want to see market proceed like this. So let's say the market starts giving us this correction, and then we'll come around here, and then we see market go back up here. Remember, this is our high, our last higher low, and market come here. It has lost momentum and couldn't go further, and then we see price do this, do something like this. Now we have a change in the character. The reason why we have a change in character here is that this last higher low that was created has finally been broken. So market has breached this and closed under or beneath this low. So we have a change in character, which means that the market trend has actually changed from an uptrend to a downtrend, right? It is that simple. So this could now be considered as a new change in character, and then we can start looking for sell positions in the market. And trust me, this happens in every time frame. So if you're using a 4-hour time frame to do your analysis, then you should be looking at 4 hours and a 1 hour time frame, right? If you're looking at the daily time frame, that is another topic for another day, but I'm just giving you an insight to it, right? So this is basically how this whole structure thing works. Just understand that there is liquidity in the market, and these guys are always after the liquidity. That is where your stop loss is. That is what they are trying to hunt. So if you understand market structure in this dimension, it'll be a lot easier for you. So going forward, we're going to learn other strategies which we're going to incorporate with this market structure. So that is why you need to subscribe to this channel. You need to hit the like button. You need to hit the subscribe button so that you can stay tuned on the notification bell, so that when I post the next video, which is going to be like the series, the second part of this, you'll be able to get notified and watch. So guys, remember we talked about right here, we talked about pullbacks, we talked about correction. The difference between a pullback and a correction is very simple. Those pullback occurs, and when they do, you see that they are not really corrections, right? So let's get into the chart briefly and just see what we're talking about right here. All right guys, so this is the chart. I'm going to show some examples from what we just did now. Now look at this. This is Euro USD, and you can see, let us start from this very low right here. Now all of this can be considered as what an impulsive move, right? From this very low to this very high, this is one impulsive move. But remember what I told you guys that about the pullbacks. Now within these impulsive moves, you see that there's a lot of pullbacks occurring, right? So let me just zoom in on this a little bit. Good. Now this is the market moving. We have this blue candle is buy, and then we have this one here, right here. Now for this to be considered a valid pullback, you see that price has to go below this particular last bull candle. This is the wick right here. Price closed below it. So even if it closed with a body below this wick, or it uses a wick to just take out this liquidity that is underneath this last bull candle, it is considered a valid pullback. So we have this pullback right here, and price kept moving up, and this is the last blue candle or the last buy candle, and then price closed below it, took out the liquidity, another pullback, and we have price going severally. So we have this pullbacks here. We have another, like this one right here is an invalid pullback. Now this is a last bull candle that was created right here, and then the next sell candle that was created didn't close underneath this pullback. You can see that, right? So it closed just above it, this closed above it, this closed above it, and even this one closed above it. So this right here cannot be considered a valid pullback. However, it kept going forward, right? It kept going up. So all of this is considered what? an impulsive move. Now, where do we start having the correction? Now, you can see that the corrections, like I said earlier on, are meant to take out liquidities, right? They take out the liquidities created by those pullbacks. So we see price have a halt around here. It halts and then starts dropping. Firstly, it took out the liquidity right here. This is the last one. This one is a pullback right here, and then we start seeing market going down, took out this particular liquidity, took out this one, you can see it, and it stopped right around here before we start seeing price move to the upside, right? So, however, now this will now be considered our new higher low, and the reason why it's going to be considered as our new higher low is because this movement right here closed above this guy right here. So if I bring this line and just keep it around here, which is the close, I believe you can see that. Okay, I'm going to zoom in on that so you can see that. Now you can see that there is a little bit of slight movement just above it, so we have a close just above it. Then we can consider this as our new higher low, and this is going to be a new higher high. Just from the example that I gave you, this is a real life market and we're seeing it happen right now. Awesome. So here we go again. This is another contradicting thing. A lot of people will see this particular structure right here and consider these as a retracement or a correction. However, you are wrong if you see it as a correction, because this is majorly just the pullbacks in the market. And if you consider this as a correction and use this as a base to enter for a buy right here, you might get stopped out, just like what happened exactly right here. Now, when you enter a position around this region, what you're going to be doing is looking at your stop loss just around here. Remember, this is the higher low, and this is the movement on the market, right? So this is considered as one impulsive move. But if you don't look at this thing and just understand the difference between a pullback and a real correction, that is where you get misled and you enter into a wrong trade, and then you get stopped out. Now, this is exactly what happened. After this whole move, if you consider these as a correction, the reason why you're going to be wrong is when you see this. This is not the real correction happening. Remember, guys, the correction usually take out those pullbacks, those liquidities created by those pullbacks. So you see markets start dropping right here, created its own a little bit of a pullback here, and then we start having this market going down. Took out this pullback, and then right here, which is another pullback, market is here taking it out, creating a new higher low, because we have price above this particular guy, which is our new higher high, right? So the market just moves. It's dynamic, definitely, but it moves in these structures that have been created. But these structures that are created actually meant to, make us feel like they are, this is A or this is black, but then we're seeing a different color, right? So it is meant to be confusing, because they want to actually take you out of the market. That is just the whole game. It's a game that we're playing here. But if you understand the sequence, if you understand pullbacks, if you understand how the pullback and the correction works, then it gives you an edge in the market, guys. You definitely have to do more back testing on this thing, on different pairs, different time frames, so you see it and you get more clarification on how it works. So moving forward, we've seen an example of a pullback and a correction right here, and let me show you guys an example of a change in character, because this already we've talked about change in break in structure. Obviously, market broke the structure and closed the bow, so this is a break in structure, BOS. We have another BOS right here, and then it gave us this. Now, guys, this is another example. Let me zoom in on this. Now, take a good look at this. This is considered as our higher low, right? This is our higher low right here. Now, you can see the price moved from here to here, right, and stopped around here. But in the course of this movement, we can see that we had a pullback right around here. This was the last buy candle, and then this candle took it out. So obviously this is a valid pullback, and then market continued moving. Now, some persons will use this pullback as what? A base for a support to buy, and that is where they hit you out again. Now you can see the price came back down here. Now a lot of people will start buying around here and put their stop losses just below here. This is, you see a lot of rejection, and then price gives you this fake move, right? This fake move to make you feel like, oh, we're on the buy now. Buy stops will be activated, sell stop losses will be just around here. You understand? Okay, so when the price start moving up, and before you know it, we have this week coming to take out all of this liquidity. So this is just what considered as, this one right here is not a valid a correction. This is rather a pullback. So price came down and took out the liquidities right under this pullbacks, and you see price that came back down again before it mitigated and it started going up to the upside. So we have to be very careful in understanding how this pullbacks and correction actually works. Now let's go forward. So I want to talk changing character for a little bit before we just end this right here. So as you can see, we have another valid higher high here and a high low. This is not going to be considered a higher low, obviously, for this particular move because price didn't break here, but this is going to be considered as our higher low since we have this very breaking structure right here. Price actually closed above it, so yes, it's a breaking structure, but then we had a change in character right here because when price came around here, okay, obviously we're going to be using this. Yeah, this is the price that moved it to this point, right? So if we have price, this is our last higher high, and then we want to see price break over this to continue with the high momentum of the buyers in the market. But then again, what do we have? We see that price couldn't make that break, and if we consider this as our last higher low, because there was no high. Immediately this low was created, this was the next high we had, so this is obviously our higher low. So for us to see a change in character, we want to see this price actually taken out right here. So this line right should be broken, and that actually happened. So you can see it right here, that price broke down and then used this as a resistance, and then we started dropping. So this is going to be considered a break or change in character because we have now taken the last higher low and then we have changed character to the downside. And obviously, so price, it just kept going down and down and down, and before we had another change in character again. So basically that's how this market just moves, right? So this is just what we're going to be talking about in the first part of our market structure video, and I believe that you have found value in this video. And if you truly have found value in this video, guys, please hit the like button, subscribe to this channel as well for more beautiful contents like this. Also jump in the comment section and tell me what videos you guys would like to see, what topic you would like me to talk on. But then we have a series that we are following, so the next topic is going to be treated in line with this. It's like a continuation from this particular video. All right, guys, so that is going to be the end of this particular class. I'm going to see you in the next video. Bye for now.